What's up traders, Amber Gwendolyn here, back with another video. Today we're going to be talking about the short I took on Nasdaq 100. I was shorting against the intraday trend coming off of an M15 bearish order block. I've got two clips in store for you guys. The first clip is my pre-session forecasting, so like I've been doing in the past couple of videos, just recording what I'm looking for, what levels I'm looking to trade from. And then in the second clip, we'll actually go over the trade itself, how the trade set up, what I did well, what I could have done better, which actually really, what I could have done better could have ended up my day way better. And then, yeah, we'll just take it from there. I hope you guys enjoy the clip. See you in the next piece.
What's good, y'all? Charles here. Hope you guys enjoy the video coming up. If you guys enjoy the video or are looking for any more content around ways to grow your trading and investing skills, definitely take some time to subscribe as we post content around that every single week. So hope you guys enjoy it. Hope it provides some value. Join us again next time.
Alright, what's up traders? Today is Friday, December the 2nd. We had NFP earlier today, which was this big move here. Boop, boop. And now we're coming into the afternoon session. So let's start on the daily time frame. So we saw some follow through from yesterday's bearish reaction to that weekly bearish order block. And then we pushed down lower. Here, I'm going to move this just for a second. So you can see we reached down towards the weekly open price. Didn't quite get there. But yeah, so that's kind of the daily narrative, is responding to what I feel like is a bullish response to the discount PD array. Moving down to the 4-hour time frame. So we had this again. So we had the wick higher coming into the second half of the AM session, and then into the lunch. We had a lunchtime reversal coming back down. Nothing really to look at on the 4-hour. Looking at the 1 hour, it looks like we're having a bearish response here at the previous day's low, which is also bringing us back under that old liquidity. The previous week's high, we're back under that now. We're just a big imbalance that we've reached into, and then bodies closing below the previous day's low. Let's check out the 15-minute time frame. So on the 15-minute, we have this bullish push higher with M15 for value gap and order block. And I was anticipating that we could see a bullish response here. I'm not sure if we take out these highs or not, or if we're going to get a bearish response and kind of just stay range bound. But I'm trying to prepare for either way. I'm looking on the 5-minute time frame. Now that we're getting like if we continue higher, we get that 5-minute fair value gap overlapping with this nice little gap down. I would like this area to look for longs. Longs after a pullback, since we're getting clear M5 displacement now. And I would be targeting, I mean, there's clear relative equal highs here. I think we could dig further than this M5 order block, closer towards this M5 fair value gap, or maybe this one here that coincides with that refined level of the order block, as like a market maker buy model. And then I'll go ahead and pull up the forecast that I did. 2 paths that I'm looking for us to take. So I was thinking we could get a pull lower to break this low, and then we'd be using this kind of area as resistance. Or what I'm anticipating potentially forming now is just the pull back into this lower M5 fair value gap that's below the M15, and then a push back towards that M5 bearish order block to come down to complete more of the market maker sell model with the lower M15 fair value gap. So right now, longs are kind of on the table. Pretty low risk environment for me. I'm just going to keep sticking with the 0.25%, and I will update you guys after, I mean, if there's like a trade setup, or maybe wait till the power hour, and yeah. So I'll catch you guys in the next clip. So I was looking at like this order block to be used as a potential point of resistance and to take us back down towards these lows with this market maker sell model, and then like I said, back down towards the cash low, because what I was seeing was a full market maker sell model and then the smart money reversal, and I was looking for us to just break into this fair value gap, come back up here, and then push lower. So sorry, I don't use the trading view tool a lot. All right, so we broke below that M15 FEG, filled in the M5 FEG, and then I thought we could get price to come back up into here. And then we had the afternoon opening price. And then we had this 3 candle formation here. And I was a little bit nervous because I was like, well, this looks like it's going to take us back up into trend to take out these highs above 11,960. So let's go down to the 1 minute time frame. Boop, boop. And so we ran buy side liquidity here and completed this little internal market maker buy model. And yeah, so I was just patiently waiting to see what we got. We got a big push higher, and then we pushed right perfectly into that M15 bearish order block. And I waited, even though normally I like to see this kind of like 3 candle formation. I waited to get short because I needed to see that FEG formation before we got in, and I knew that there was a chance that we could dig a little bit deeper into this fair value gap. Oops. All right, anyway, so let's take it back to here. Working on this. So we push back into that fair value gap one more time. And now I'm like, okay, if we can break below this low and potentially even break below this low, then I want to look for shorts. And then so we get this really nice bearish engulfing formation. This new bearish order block gets created and we break below the low. So now I was like, okay, now I need one more candle so I can get the FEG. Buyout. Got the FEG, and then we were looking for shorts. Now, I'm going to show you guys. This was me anticipating the trade forming, right? So you guys can see I was looking at this before it happened. And then this is the entry that really got me. So I was actually looking at potentially taking I split my risk in half, and I was looking at taking this entry, this higher entry, as the other half of the risk, right? But then there's a part of me that was like, well, price is completely in an uptrend today. Like there's really been like no bearish pressure or anything, and I didn't want to end up adding to a loser, so I took off this higher entry point, and I just left the half risk on here, and then we'll just see what happens. Zoom this back in. All right, so price moving lower, and then we get tagged in. I was like, oh, this doesn't look great, because if we can push higher, then we may actually end up, you know, just creating like almost a little fake out, stop out, like a little liquidity run, a sell side liquidity run. I don't know why that was so hard. A sell side liquidity run to just come higher. So that's when I took off the higher order, because I was like, well, I don't want to double down on a loser. However, I was already in the trade, so I was like, okay, let's just kind of see what happens and see how it plays out. And then once we got, yeah, this stopper and higher, I was like, all right, cool beans. We could probably just continue to move lower from here. And then we came back again, and I was like, oh my gosh. But you know what? I stayed in because originally there's just that little fair value gap right there. And that was my original entry level. I was like, okay, cool. So we might just be pushing up there to reject lower. So I'm just going to hold in. And then we got this big push, and I moved my stop loss to just above that swing high. And then my plan for the trade was take half off at 2R and then close the rest using M5 momentum to manage the trade, which is what I like to do. And then we get these really big pushes, and then we're breaking below that swing low, which is where I took my partials. I closed half the trade there, and then I left that the stop loss at above this candle's high here, because that was an M5 swing high. So if we were going to hold momentum, I was like, well, we should just hold it there. And then after this is when I was like, oh, okay, my trade is probably in trouble. However, there's an entry, an FEG, that could be used potentially as an entry for more shorts. So I decided I'm just going to hold in, keep my stop at the candle, at this candle's high, because that is what invalidates the trade idea. And until that point is broken, then I need to be involved in the short trade. So once we got this right here, right, so now we have potentially an FEG forming, and then boom, so we have an FEG that formed right over the afternoon opening price. I was like, oh, I'm probably going to get stopped out. And yeah, so price moves lower, I get stopped out, we jump down, back, fill in that FEG, tag that open price. This is what I could have done better. So I was out of the trade, and I knew that if I was getting stopped out of the trade, the momentum was no longer in my favor. We're probably moving to the upside. So what I could have done was pivot, and then just had my entry at the afternoon opening price with my stop below that swing low. It's literally that simple. And then I would have just been tagging, because I didn't think we were going to come back up to the previous day's high, or excuse me, the previous day's cash close. But what this is just a market maker buy model. So I could have just targeted really the FEG right in here, like so, and then just managed the rest of the position, because that trade, while it took a minute, would have worked out. We did end up using that bearish order block as resistance one more time, and then eventually we just took off above that FEG, so now we're probably going to use that as support. To be honest, I wasn't at the charts after this. I was done. I was like, I'm going to end up chasing it and then not have any good setups and having a bad day. So I just let the market go without me after that. So what I could have done better was definitely just be on the lookout for, I don't know why that's doing that, exit. All right, so I don't know. I could have just been on the lookout for sorry, I'm just trying to get out of the replay tool. I could have been on the lookout for longs and been more aware, because order flow was bullish coming into the day. Like we had this big push down for NFP, but the cash session totally just ran bullish pretty much all day. So it's like you could have just been looking for bullish continuation, and that trade really would have paid. But overall, it's all right. I got short at the level that I was looking to get short at, which is something I'm definitely trying to work on, and making sure I stick to my plan and follow through on the things that I say I'm going to do. And that's pretty much the trade. So if you guys have any questions, drop them below in the comments. If you like the video, give it a thumbs up. Subscribe if you're new. And as always, I will see you guys in the next video. Take care.